Palo Alto just reported their earnings and the stock is down about 4%. Is this a buying opportunity in this top cybersecurity company? This is what I'm going to cover in this video. Please note that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Palo Alto Networks. Please consider subscribing to the channel. In the most recent quarter, as you can see on the screen, the revenue growth was 15%. You can notice that they are growing on a consistent basis in the low teens percentage for a while now. As you can see on the screen, the ARR is at $5 billion and the gross margin is in the 70% range. They are profitable with a positive EPS. Fully diluted share count is sitting at 708 million as of today. Palo Alto is already a big company making revenue in order of $8 billion. Naturally, their growth is slowing down as they are big. They are making some changes with respect to their platform and it's starting to yield results, but they still need to prove it by accelerating the growth into high teens and possibly 20% revenue growth rate from the current low teens percentage growth. Now, let me show you the valuation. This framework helps me with my personal investing decisions. Please do not buy the stock on what I'm showing you now. Please do your own research. Now, as you can see on the screen, for 2024, they made about $8 billion of revenue. Since they are growing in the low teens percentage in the last few quarters and cybersecurity being a secular growth industry, I am assuming 15% growth with which they can make $16 billion of revenue by 2029. And that's the reasonable assumptions case. Based on their gross margin, I am estimating net margin of 25%. Now, they are nowhere near this, but they can get there once they optimize their operating costs. I am assigning a 40 multiple for this. Now, you may think it deserves more, but I'm sticking to 40. They have 700 million outstanding shares, but I am assuming 1% buyback each year from now on to have 670 million shares by 2029. Based on this, the stock price should be $239 by 2029, and that represents a 29% gain in 5 years from the current price of $185, which is not attractive, which is not an attractive gain. Now, with the great execution case, I assumed 15% growth, 30% margin, and 50 multiple. Now, if that becomes reality, the stock can almost double. For my personal investing journey, as you all know, I sold CrowdStrike at $290. I still hold Fortinet at $59 cost basis and Sentinel-1 at around $13 cost basis. So as of right now, I'm not a buyer of Palo Alto at this current price. I will consider if it gets to $130 or lower, which gives me a better risk reward. What do you think? Would love to know your thoughts. Let me know your thoughts in the comments. And thank you so much for watching.